Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I was doing a little bit of research just the last couple of days and I came across a company that we have not actually discussed in about 7-8 months, and I was very shocked when I found out the company is up over 52% since the beginning of the year. And I was really genuinely surprised because this is not Nvidia, this isn't any of those technology companies, AI companies. So I'm going to share that with you guys today. I'm going to try to make the video as short as I possibly can. What I would like you to do though is just like the video. If you have not subscribed to the channel and you're a new member, of course join us in the community inshallah, and don't forget to join us in the Patreon account where you get access to all of these things, including the Discord where a lot of brothers are sharing very good practices. You get all the dividend trackers, you got the dividend calendar spreadsheet, you've got the stock watch list which I'm updating currently, and on top of that you get the Sharia compliant investing ebook. So if you are new to the channel, of course you get hold of all of these things. It will cost you about 15p per day. Now let's get started and look at the company. This company is Williams-Sonoma. This is one of the companies that I have not spoken about this company for about last 8-9 months, and right now a year to date is up almost 53%, which is absolutely ridiculous. I was really surprised because this is not Nvidia. This is, I'll show you exactly what the company does in a second. So over 53%. And what does the company do? They actually sell furnitures. They actually have different brands. So they've got companies like Pottery Band Kits, they've got the Pottery Band, they've got the Western Elms, they've got Williams-Sonoma, they've got the home side of it, they've got Mark and Graham, which is I think bags and so on, Rejuvenation and so on. So all of these companies basically goes under that umbrella of that Williams-Sonoma's. So in terms of revenue side of things, as you can see, the last year they've reported $7.8 billion of revenue, and you can see the breakdown, which is quite evenly, but Pottery Band is actually 3.2 the highest. The rest of them is about 1.8, 1.2, $1 billion and so on. And everything else looks really good, and I have not seen any reasons why this stock has gone up that much. And now when it comes to their industry leaders, when it comes to basically their revenue side of things in comparison to these companies. But yeah, so the company that sells this type of products is actually up over 52%. I don't know if that's just the market or if something else, if there's something I'm missing. So I'm going to show you guys the the forecast for this company for the next couple of years. So at least then we can see if basically it's up for a reason basically. Now starting with the company, so about 20 billion market cap, it has a dividend yield of 1.47%, and as you can see is that dividend is actually safe, about 80%. Now 23% in terms of payout ratio, which is quite very low, so that gives them room to improve or increase that dividend if you like. 26% increase recently, and not only have they increased that dividend for 26%, they also actually buying back their own shares. So this is the announcement they made recently. So they've increased it about 26% and actually buying back about $1 billion of that overall. And they also at the same time, they have when it comes to the revenue side of it, they've actually beaten the top and bottom lines. However, a year on year is actually down about almost 7%. So I was quite surprised to see this company go up because they only reported on 13th of March. You would expect if that was any other company, if they reported something like this, it would have gone down. But of course, they beat top line, bottom line, and in terms of looking forward. So in terms of the forecast for the 2024, it's actually not amazing. It's actually they're expecting it to, where was it again? Here we go. So they're expecting a decline, which is very interesting. So I will show you what the analysts are expecting as well. So nothing huge so far, but let's carry on anyway. In terms of dividend side of things, about 16% increase in the last 5 years, and 11% increase in the last basically 10 years. Now 14 years of increase in that dividend, you get $4.52 for every share of this company that you own. It seems a little bit overvalued because right in the 5-year average in terms of dividend side of things is 2.3%, and right now is 1.47%. In terms of forward PE is more or less the same as well, 13.5. Right now it's about 20, so it seems very expensive, and against the consumer discretionary side of sector is also seems a bit expensive. Now in terms of payout ratio, like we've already seen, about 30%, so it's not actually bad at all. Next year they're expecting to be about 30%. Right now it's about 23%. Free cash flow per Payout ratio also again similar sort of thing, is increasing a little bit but not by much. Earnings per share is going the right direction. Free cash flow per share is heading the right direction, but it's actually declining a little bit next year. That's the expectation there. Shares outstanding, they're buying back their own shares. Total sales is heading the right direction. And then the last, basically this year, 2024, and basically next following year, they're expecting, they've already reported, I think, 2024. So next year, which is based 2025 for them, their fiscal year, is 7.75, which is basically where it is now. So the revenues are expected to be flat. For that reason, the stock should be down. I'm not sure. Normally, that's what we're used to, right? Return on invested capital about 50%, return on invested capital of 36%, on equity of 50%, which is quite nice. Operating margins 16%, free cash flow margin of 19%, net debt to EBITDA almost non-existent, which is really good. So everything seems really good in terms, like there's nothing wrong with the business side of it. So let's now have a look at the expectations moving forward. Maybe there's something that we missed out. There we go, 3%, 5%, 5%. So nothing absolutely huge there. That's what you expected from these old companies that sell this type of product, where they're capital heavy and so on. Okay, but look at this here. Also 2%, 3%, 4%, nothing huge. So why is this stock up so much? I don't know. I really don't know the answer to that question. Now, having just a look at one more thing. Looking at Yahoo Finance, you could see current year it's about 5%, next year 5.8%, next 5 years 10% every single year, which is not bad at all. And they're expecting the price to be about $290 per share. Right now is more of a hold than actually a buy, according to Morningstar, Seeking Alpha, Yahoo Finance. And talking about Morningstar, there we go, almost 40% premium right now. $306 per share is where it's at now. 220 where they think they should be. It doesn't not have any economic moat, but in terms of total return, the last 10 years company has done absolutely amazing. 17%, over 17% of total return, including price appreciation as well as dividends, which is quite nice to see. So yes, it seems very expensive according to all of these guys. Let's go back to Seeking Alpha, okay, and we can check it now what they expect. So 4 strong buys, 1 buy, 17 holds, 3 sells, and 1 strong sell. That's about 7% downside from where we are now. $286 per share is where they think the price should be. Now, you know how much I love free cash flow. So looking at that now, it's actually declined from 1 billion, 1.1 to almost 700 million to 1.5 almost, and then again down again. This is the type of business that uses a lot of money to actually make that revenue. So like if we look at the total revenue every single year from $4.6 billion to $7.7 billion, cost of revenue, okay, 2.8 to 4.4. Now they spend the gross, so that's how much they're spending, 4 billion. They're making 7.7 and we're spending 4.4. This is a capital heavy company. So 3 billion, taking 3 billion away from 7, that's actually not bad, but they're spending a lot of money. And if we, let me see, actually fluctuates, goes up and down. So 4.1, 4.6, 4.9, come back down again to 4.4. Right now that's exactly where we are. So yeah, they do spend a lot of money. So what goes in their net income overall? Let's have a look at their net income. There we go, net income from 300 million to $1.1 billion to 1.1 again to 900 million to right now. That's exactly where we are. So yeah, so it's in terms of revenue side of it, they're not keeping a lot of that. You know, that money is not going straight into cash flow, free cash flow, because as you can see here, it basically has declined a little bit, but that's enough to cover the dividends and so on. And just to finally show you, so we've got Morningstar valuation, we got Seeking Alpha, we got Simply Wall Street, as well as multiple valuation and dividend discount models that I used, that gave us $277 per share, which means basically the stock should come down at least to 10%. If you use a 5% over margin of safety, which I always suggest, that will be about $263 per share. Now, if we see a correction in the market and you're really interested in the company, you potentially might get your chance or 15% decline from now on. I feel like this company is overvalued right now. I don't understand what the hype is all about. The fact that this stock is trading this much in just the last couple of months. But yeah, maybe I'm missing out something, but whatever it is, 53%. That's what Nvidia and all these companies, I don't even know if Broadcom has done that, to be honest with you. Let's go into Broadcom. Like 21%, and this is a company that's been going up every single week or whatever, but for this company to go up that much is absolutely crazy. Anyway, I want to stop the video here. I hope you enjoyed this type of content. It takes a lot of time and effort to put these videos together. I would appreciate if you can join us on the Patreon account, and of course, like the video, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.